Amit Goenka, your views on where the residential market is right now?
So, just to reiterate, the first wave effectively being a unknown black swan event really provided a lot of cushioning for the economy as a whole through various interventions, both by the RBI, by the finance ministry, by various regulators, and so on and so forth, where a lot of SOPs, one-time restructuring, TLTRO, and a lot of mechanism and cash was infused into the economy, providing a lot of cushion, and therefore even covering some of the possibilities of a mishap, failure, and stress that could have precipitated in the first wave. No such intervention really was seen in a wide scale during the second wave, which really led to a lot of exposure of the weaklings within the system, which were otherwise not being exposed to that measure in the first wave. So those who showed the deftness, the resolve, and the fundamentals to actually continue to weather the second wave, and also showed some amount of green shoots because there was a lot of euphoria, as was mentioned earlier, between October to March on various counts post the unlock in the first wave. And those who actually made money or showed cash flows and resilience during that green shoot period were really the right candidates for receiving new capital. So, Ramesh, in the current times, I'm seeing that a lot of new capital is being pumped into the residential sector, both at greenfield, distressed, and brownfield levels. We're seeing new capital formations happening, new funds being raised, both global and domestic capital making a beeline for the India real estate again, basis the fundamentals that are now visible, seen in the past few quarters. And I do believe that is clearly intended for those boys. Whether large scale players, of course, there is no doubt that they will only continue to grow, and consolidation, which started effectively from 2016-17 onwards, which has now got accelerated in 2021, will certainly continue its journey. But even for those who are not part of that and are possibly the tier 2, tier 3 players, will still continue to benefit from this new capital and the newfound resilience and demand from the marketplace. So I do believe there's a story also for them, and that's really where we participate, and that's where our capital is continue to find its money.
Thanks, Amit. Amit Goenka, let me start the next question with you. Swami's done a fantastic job. You've seen the funds post so many developments. They've funded now, start projects. What is the ask of typical capital providers today from the government? If you were to advise the government today, so that there are so many people on this panel itself, Amit, Bhagat, Sharad, all of them have capital. What is required from the government side so that we have more Swamis and Sharath and Amit behaving like a Swami in the future?
I think that's a wonderful question, Ramesh, and something which we have been trying to address for the last couple of years, amongst various AI funds for sure. First is, let's look at the supply of stressed assets. That itself is where the bottleneck lies. For example, AI funds, which is really what most of us are not allowed to buy bank loans because we can only issue security. So we've been saying, well, why do we need to be an ARC when if you can allow AIFs to also effectively act like securitization trusts and be able to acquire assets from banks? I think that's therefore one of the constraints, that we're not able to take over a large part of the stuck and stressed assets from the financial services and from the banking industry only because of regulatory reasons. The second, when it comes to the regulatory and protective regime, now clearly Swami has been given a sovereign protection when it comes to insolvency and bankruptcy code and resolving assets under that, wherein if they have invested, they will clearly have the ability to continue to act as senior lenders throughout the life of the investment, a protection that is not available to everybody. That obviously sort of tilts the scales against everybody else. Of course, it's a very, very important legislation, and it must be mandatorily be applicable to all who are looking at stressed assets, that once you have invested, you must have regulatory protection so that your capital then cannot be at risk, because it is intended to rescue these stressed assets and to be able to provide homes for those who have been stuck for several years, and effectively, resolve the economy as a whole. So I think that's the second ask. Third, there are several costs, charges, and dues which suddenly start precipitating from various statutory bodies, whether it was land-related rents, premiums, taxes, and what have you. Something which has been in abeyance for so long suddenly starts to precipitate. So there has to be a back-ending or a mega relief provided as far as, because clearly statutory dues are on the top of the table. Government dues sit above all of us. So they have to be back-ended, they have to be reduced, there has to be relief provided, and there must be a certain amount of impetus to ensure that the money is used in the nature of a social impact to be able to first complete it and then a waterfall decided. Otherwise, again, that start-stop nature or finding new money to fund old money becomes a constant problem. Of course, Irfan has already described the problem that one faces with home buyers, from being enthusiastic to being litigant to actually being very, very volatile. And so, while the IBC has allowed home buyers to become a significant part of the committee of creditors by making them financial creditors, there is no modus operandi in place as to how this business has to be run. So while we have seen IBC included, we have not seen too many successes come out of that regime in terms of resolving of assets. Some have gone to liquidation, some have gone to a resolution plan. Those resolution plans have not been implemented. Supreme Court has had to step in. Very, very erratic. So I think we need to smoothen out and again maybe step back and rethink as to how stressed assets are going to be resolved, because SARFAESI has failed to resolve it. IBC, which was expected to resolve it, is not doing necessarily a great job on the housing side. It may be doing a great job on many, many other assets, but because of the nature and the type of stakeholders, it's more challenging on the IBC regime. Maybe the new ARC or the bad bank, the National Asset Reconstruction, may be an answer, where it can then pull in and then start giving away assets to the right capital providers and AIF. I don't know. We'll have to wait and see, Ramesh. But I think sourcing of assets is a problem, resolving them subsequently is a problem, and all of this requires a more aligned governmental policy. We've seen policies come out for rental housing.
Yeah.
There must be a policy which has to be also instituted for the purpose of stressed assets and impact housing, because capital alone cannot be the solution. There are legal, regulatory, and consumer challenges which also need to be addressed, as there are other challenges at the state and federal level.
Well summarized, Amit.
Fantastic. So not only from the developers' point of view, but also investors' point of view, specialization is the way forward. And I think that was one very exciting conversation, because residential is close to everyone's heart. So, thanks, Mr. Ramesh Nair, for wonderfully moderating that. I actually had 2-3 more questions, but, we have to move into the next session. But thank you so much, everyone, for sharing your views and that, your opinions. Most importantly, what should be the way forward, how we should work out various challenges that, again, a lot of our speakers mentioned the challenges as well. So thanks, Mr. Amit Bhagat, Mr. Amit Goenka, Irfan Kazi, and Mr. Sharad Mittal and Ashwinder Singh, and Ramesh Nair, as always, for that wonderful moderation and conducting of that panel. Thank you so much.